We'll be discussing about stock market.
Table of contents. Definition of stock market. How does stock market work? What are the functions of a stock market? What is the significance of the stock market? Who helps an investor trade on the stock market?
So what is stock market? The term stock market refers to several exchanges in which shares of publicly held companies are bought and sold. Such financial activities are conducted through formal exchanges via over-the-counter marketplaces that operates under a defined set of regulations. It is a place where shares of publicly listed companies are traded. Here are some key takeaways for stock market. Stock markets are venues where buyers and sellers meet to exchange equity shares of public corporations. Stock markets create efficient price discovery and efficient dealing. Stock markets are components of free market economy because they enable democratized access to investors' trading and exchange of capital.
So how does the stock market work? Stock markets provide a secure and regulated environment where market participants can transact in shares and other eligible financial instruments with confidence, with zero to low operational risk. Operating under the defined rules as stated by the regulator, the stock markets act as a primary markets and secondary markets. But what is primary and secondary markets? A primary market is a source of new securities, often on an exchange. It's where companies, governments, and other groups go to obtain financing through debt-based or equity-based securities. Primary markets are facilitated by underwriting groups consisting of investment banks that set a beginning price range for a given security and oversee its sales to investors. While secondary market is where investors buy and sell securities they already own. It is what most people typically think of as the stock market. Those stocks are also sold on the primary market when they are first issued.
What are the functions of a stock market? The stock market ensures price transparency, liquidity, price discovery, and fair dealings in trading activities. The stock market guarantees all interested market participants have access to data for all buy and sell orders, thereby helping in the fair and transparent pricing of securities. The market also ensures efficient matching of appropriate buy and sell orders.
What is the significance of the stock market? The stock market is a component of a free market economy. It allows companies to raise money by offering stock, shares, and corporate bonds, and allows investors to participate in the financial achievements of the companies, make profit through capital gains, and earn income through dividends. The stock market works as a platform through which savings and investments of individuals are efficiently channeled into productive investment opportunities and add to the capital formation and economic growth of the country. But who helps an investor trade on the stock market? They are called stockbrokers. Stockbrokers act as intermediaries between the stock exchanges and the investor by buying and selling stocks. And portfolio managers are professionals who invest portfolios or collections of securities for clients. Investment bankers represent companies in various capacities, such as private companies that want to go public via an IPO or companies that are involved in pending mergers and acquisitions. And that is all for this video. This has been your presenter, Catherine Joyce Gabuya.
And Joseph Daniel Makiling, saying on behalf of Group 8, thank you for watching.